Yo, what's up? Welcome to Degen Ed. That's degenerative education, meaning none of this is financial advice. Just me having fun looking at charts, like the chart behind me, which is of Rivian Automotive, ticker symbol RIVN. And the reason why I'm excited about this chart is because earnings recently happened on November 7th, and following earnings, there were a couple of big red candles, which might present a good opportunity. But, at the same time, I may be wrong about that. But, to show you what I'm thinking about, I'm just going to throw up some lines that I've drawn here. And one of the reasons why I'm excited, or I guess I should say another reason why I'm excited about Rivian, is because prior to earnings, there was this gap that was formed that was filled today. On November 9th. November 8th, it almost filled the gap. I think it was 2 cents off from filling it. But now today, as you can see, this big red candle, the gap has been filled. And another reason that's to be excited about it is a gap was left to the upside at around going to $21.60. And so I'm just going to go over some of the lines that I've drawn here now. One being $15.28, which is based on this touch point from January 19th. So the low of that day was $15.28. I also have a couple other lines drawn below, one at $13.30 based on this low on June 27th, and again another line at $12 being a round number and having a few touch points back in late April. And so those to me seem like potential levels of support if the stock price does break lower than where it's currently at. But I feel like it may not, or at least not for the time being, and I'll show you why in just a minute. I also have some trend lines with this one from the top, potential resistance in this wedge, and then also going back to the end of March, March 20th, with a touch point on June 27th. So that's kind of a recurring date that I'm using here before it launched up. And then again, this other trend line where we seem to be at this point right now, going from May 15th again through June 27th, and we're right around there. But while this longer trend line could serve as support, let's say maybe around $14. But there's one thing that I found really compelling when making this video, or preparing to make it, is based on a Fibonacci retracement. So if I take that from this low of $11.68, which was hit on April 26th, and I take that up to the top to $28.06, we can see that we are currently trading right around the 786 which is at $15.19. So we're right around that very significant level. And so it seems like this could be a great opportunity for some upside. It might look really scary. It might look like we've broken below this trend line that I've drawn, but we are at this notable level on the Fibonacci retracement, and it looks like we may have double bottomed with today's candle. So November 9th, the close and the low was at $15.33. So with it closing at the low, that seems pretty bearish, but there are a lot of signs, in my opinion at least, I could be wrong, that we could be at a bottom and there could be some upward moves coming with all of this support based on touch points from the past and the Fibonacci retracement. So if you like that video, let me know in the comments below and subscribe to the channel for more content like this. I hope you have a great rest of the week trading, and thanks a lot for watching.